Alright, what's up everyone? Welcome back to the channel. This is Dan here once again, and we've got another daily market update. We had some really interesting moves overnight in the world markets because of the Bank of Japan's decision on switching their curve control policy. So we had a lot of real interesting moves in the markets. Yields went skyrocketing overnight, equities tanked. The Japanese yen skyrocketed while the US dollar was tanking as well with equities. And gold was jumping off the dollar weakness, so there's really interesting moves, especially with the dollar tanking with equities overnight. So let's just jump into the charts and see what we're looking at here. And the first thing I want to point out is the fact that today was a green day. You can see that little green candle right here. It's not a big green day, but everyone was expecting more red in equities, especially after the Bank of Japan's decision and the slight gap down in equities overnight. So I believe most people are expecting another red day. We turned out to be green, but you got to consider this green day came after the market has already fallen over 4% in the past, around 5 or 6 trading days. You can see that right here. So a little green day can be expected every once in a while. Those short-term swing traders like to take a little profit from time to time. After all, the market cannot go straight down, you know what I mean? Now, everybody was bearish because of the Bank of Japan's statements about the possible change in the yield curve, or that they will be changing the yield curve decision. Basically, they pegged the 10-year yield at this 0.25 basis points line that I'm marking right here. This is the 10-year yield on Japan Treasuries right here. They were keeping the yield peg near this line. Whenever the yield started rising above this line, then they would print Japanese dollars, buy some treasury bonds, bring the yield down essentially. And that would hurt their currency's value, which strengthened the US dollar value. So that had a big play in why the dollar was rallying over this past year. And you can see today, this daily candle, the Japanese yields ripped because the Japanese said that they weren't going to peg it at 25 basis points anymore. I believe they said they're going to begin buying around 50 basis points, but this basically signaled the end of like a multi-decade long policy. So it was a serious shift in policy, and the market responded big time. Look at the jump in yields. You don't see that very often. Now, this sent yields up worldwide. You can see the longer term yields here. Here's the 2-year yield, the 10-year yield, and the 30-year yield in the US. And you can see the longer term yields here, they jumped massively off this news, and that's bad for equities in the current environment. Raising yields hurts companies' profits, and that's been killing us this whole year with the Fed's raising interest rates, essentially raising yields, and that's been hurting equities, and that's what we saw overnight last night. That's why people were expecting more bearishness during the day, but like I said, this could be a tiny pullback before we continue downward. Who knows? The market can't go straight down all the time, right? Now that brings us back to the S&P 500, so we can see exactly what we need to do if the market stays going bullish and we're going to stay in a downtrend. Then we need to find a resistance to short, or if we're going to continue going up, then we need to definitely get in on this uptrend, see where this thing's going to go, see if this bullishness is even warranted, right? So let's check out the technicals. The first and most obvious thing about this chart is the technical breakdown of this support here, of this price channel I've highlighted in blue, or price wedge. Watched a lot of YouTubers, I watched a lot of people talking about this support line here, this wedge, and when we broke down, apparently the whole market was ready because we had a sharp sell-off, a sharp downtrend after that. So when we did break down here, there was short-term bearishness for sure. It looks like this 2-month or 2.5-month uptrend is over, but we could get a bounce. Are we going to get a bounce here? Let's see what we're looking at. First thing I want to point out is this MACD. It looks like we're going to get short-term bullishness on this thing if we get this bullish cross to the upside here. And if you don't know MACD, it'll look something like that. I went ahead and drew it out for you. If we get that orange line to cross above the blue, that's a short-term bullish cross there. And that would signify short-term bullishness. Could even confirm today's slightly green day, right? Most important thing I want to say is you don't want to fight the trend, and it looks like the trend's heading downward, but this short-term downtrend is kind of overheated. Market doesn't go straight down. We might get a little consolidation or even a little bounce to the upside. Now, if that happens and we do get a bounce, the closest stronger resistance level I'm watching is around the 386.50 level. That's a longer term resistance / support level. You might get a little rejection there if the market wants to continue this downtrend that it looks like it is turning into. If today's green day was a fake out, then we do have a support level that was near today's lows, I should say intraday lows, around 377 and 80 cents. You might want to say 378. That seemed to be the support of today, and it's a long-term support slash resistance level I've had mapped out for a minute, so keep an eye on that 378 level tomorrow, or very soon. If we do just dip below that with volume coming in and momentum to the downside, then this downtrend will be confirmed, I believe. I might be looking to get back into some shorts. And likewise, if we get a bounce and the market rejects this 386.5 and we get a lot of volume and a lot of momentum to the downside, I might be looking to get back into some shorts as well. But if we do bounce hard past that resistance level that I mentioned and we get a nice bounce, and you really want to get a short on this thing, if you really believe the market's going to come back down, then this had a few previous lows where the market bounced at that previous topping pattern before Jerome Powell killed the market. It's a possibility to get a rejection there around the 388.5 level there. It's a shorter term resistance level, but it still seems valid. Wow, that's really sloppy, right? But anyways, those are the near-term supports and resistances. There's a lot of other short-term supports and resistance I don't really mention. Those are just for quick scalps, like a day trades type. So we don't need to really worry about those if you're trying to find the overall trend. Most importantly, guys, you really don't want to fight the trend, and the trend has broken down. It looks like we're starting a downtrend, and all of this selling is conveniently happening near the bear market resistance that I highlighted there in purple, and the 200-day moving average that I highlighted there in white. These are both strong resistance levels here, guys, especially in a bear market. So this selling may very well be warranted, but the market doesn't go straight down all the time, guys. Sometimes you get a bounce up and then a continuation to the downside. So don't be scared by this green day. I wouldn't be completely scared out of your shorts. Unless this is one big giant pump fake and the market's going to skyrocket. The only reason I can see that happening because this selling near bear market resistance and the 200-day moving average, the whole market was waiting for this, I believe. So we'll see if the market pump fakes us. But at the moment, guys, the trend is down. Don't fight the trend, man. Now, real quickly, we want to go over a buying opportunity before we get to the end of this video here. Now this chart here is the Japanese yen futures, and the yen has been on a massive downtrend all year. Just like I mentioned earlier, the Japanese yield control policy has been bringing this thing down in a big way, and more recently you can see it's hit a low and we're getting a really strong bounce. It looks like the yen wants to go into a bull market, right? And you can even see this daily candle here when we flip to the daily candles, a massive green daily candle. A lot of investors piled into the yen after the Bank of Japan's talks about changing the policy. This is obviously bullish here, a big green bullish candle, and this comes after a big bottom, it looks like here. We came out of that long-term downtrend. This is really looking like here. So if you truly believe in the yen like I do, and you think the yen's going to end that long-term downtrend, then if you really believe in this yen uptrend, I've highlighted a few ticker symbols that you can trade on the equity markets. If you don't want to just straight buy out the futures, right? If you don't have that margin requirement just yet. You've got FXY here. This one tracks basically yen futures, or the JPY USD if you're talking about the Forex market. And you can see it had a massive over 4% day to day. That's a huge gain on any Forex currency, especially a ticker symbol in the stock market that tracks any currency, right? And you can see the bullishness, man. It's been doing that for several days, several weeks. If you want to get leverage, we've got YCL, the ticker symbol. Now that one is leveraged, I believe, 2 times or 3 times. It looks like 2x here. This one went up 8.24%, well over 8%. That one's leveraged there, so it'll have a lot more risk. Essentially on YCL, the leveraged yen ticker symbol, if any gains you make on the yen, it's double on that one. Any losses on the yen, then it's double on that one. So you got to be careful. Any swings in the market will look a little more extreme on YCL, the leveraged yen trade, as compared to the FXY, the one that's not leveraged. It just tracks the yen as it moves in the futures market. Now, I'll tell you, these are 2 things I'm holding. I'm not a financial advisor, so I can't tell you what to buy or not. But, I mean, I'm liking this uptrend in the yen, and I'm still holding, man. I even added to my position today after this decision. But, like I just iterated, I'm expecting some choppiness here, especially after a big green candle like this, man. You got to expect some short-term profit takers, right, before we get more upside. But I believe it will have more upside. That is my opinion, guys. Now, that is all I've got for this daily market update, guys. If you watched it this long, I really appreciate it. Go ahead and hit the like, hit the subscribe button, leave a question, comment, concern, critique, anything you like in the comments section. It's all good. And other than that, I will see y'all on the next video.